FX Nation, what's up, guys? So I just wanted to make a quick video to go over some candlestick analysis. That way you can get a better idea as to what you're looking at in the market and better understand these candles. One of the biggest things that you need to know when trading the market is price action and how it moves, and specifically what the candles are doing. That way you can get into a trade at the best possible position. Okay, so we're just going to go over a couple different examples here, so I can kind of break down to you what you're looking at and why price either went up or went down. Okay, so let's go ahead and take a look here. So we're on a AUDNZD daily chart, and I've already laid out the support and resistance lines on a daily chart. So let's just go ahead and dive right into it, guys. So we're going to first take a look at this area here. And all right, so what we want to do is, of course, whenever price gets into an area of either support or resistance, price normally has goes ahead and actually stops moving, right? So it kind of runs into a wall when it either gets to support or resistance. Now, when we talk about support and resistance, what we're looking for is at a resistance level, we're potentially looking for sellers to come into the market and take control of price. And when we're at support, we're looking for buyers to come in and take control of price. Okay, so what we have here is right now we can see that price was being driven down by sellers, and of course in this case here sellers had complete control of price until they ran into support down here. And as you can see, when the sellers came into a zone or an area of support, you can see how the candles started to get smaller, and then it finally came to this candle here, and it printed out an doji. Now, this doji here just basically means that there's a struggle to get control of price. So neither buyers or sellers have control of price right now. Okay, what you want to typically do, and what I typically do, is I go ahead and this is on a daily, so this takes out a lot of the noise of what's going on in the market. But what I like to do is I like to go ahead and go down to a couple different time frames, just so I can get a better idea as to what price is doing, and just kind of go from there. So give me a second here, and we're going to go ahead and take a look at that. I'm just going to mark it so it's easy to find, and I'm going to go down to the 12-hour chart. And here's that area right there. Not too much has changed in that area on a 12-hour chart, so I'm going to go to a 6-hour chart. And let's take a look at it on a 6-hour chart. Again, not too much going on there, but you see that every different chart, when you go down from the daily, 12, 8, 4, gives you a different look as to what price action is doing in that particular area. Cool. So let's take a look at this on the 4-hour, which is something that I'm sure you guys commonly look at. All right, so again, we have sellers that are in control of price, and as price gets down to an area of support, you see that the candles start to get smaller. Now you see here that we do have indecision with this candle here. So sellers had control, came up to support, and boom, indecision started to form in the market. Now on the next candle, the sellers try to take back control and try to pass the actual support level here. Again, they failed. They did not do that. And here is where we have the sequence of candles that allows us to analyze the market. So we have here so this candle here, indecision candle, this candle next to it, indecision, this candle next to it is indecision. So for 12 hours, we had nothing but indecision on this pair. Essentially, we had where buyers and sellers were fighting for control of price. Okay. Now, it wasn't until this candle here where the buyers said we have control of price. And why is that? Why do I say that they have control of price? The number one aspect that I look at is going to be the size of the candle, right? So this candle here is an engulfing candle, and it takes out the last 12 hours of trading in the market on this pair. Okay, so it takes out this candle, takes out that candle, takes out that candle. So it takes all three of those candles combined. These three candles can't even make 50% of this engulfing candle. Okay, so clearly buyers have taken control. What happens next? Once they've taken control, we see that sellers still trying to fight back, but again, indecision. That's all it is. Next candle, we do see that buyers start to take control back again. We do have a candle that is at least twice the size of the previous candle. So right now on this candle, buyers have control. And then of course, then we get the engulfing candle here. This of course states complete control of the buyers in the market. Okay, so if we're trying to set up any kind of trades in this area, because when we talk about getting into the market, we want to get in at the lowest point possible, right? We don't want to get in on a trade in the middle of support and resistance. We don't want to do that. We just want to be able to get in at the best possible location, but at the same time, we want to make sure that either the buyers or the sellers have control. So anytime that you go and you're about to take a trade, you have to ask yourself, who has control of price? If you can't answer that question, then you should not take the trade. Okay? If you can't answer the simple question of who has control of price, can't answer it, then you should wait or look at a different pair. Don't trade it, because if you don't know who has control of price, how can you enter a trade not knowing whether to go long or short if you don't know who's in control of price? Okay? All right, so what we're going to look at next is, why did this candle all of a sudden stop here? We had buyers take full control of this candle. So why did it stop here? That's a great question. And this happens a lot. So let me try to answer that for you. So what we want to look at is this entire area right here. Not the individual candles, but just the area in general. Okay? So what do we have in this area here? From here to here. So that entire section, what is it that we have? We have structure in that area is what we have. So this entire area here, we have structure. And what do I mean by structure, right? So what I mean by structure is that basically price is moving sideways in that structure. So it's moving up, down, up, down, up, down. So it's basically moving sideways like that. Okay? It's not going in a downtrend. It's not going in an uptrend. It's literally just moving sideways. It's consolidating. It's resting. All right? So whenever you have structure in an area here, so this area here we have structure, right? price comes up, and if we look to the left, there's structure there. So guess what? Price is going to have a problem getting through this structure because it's already previously had a problem getting through there already. So it spent from, the 30th of March all the way through the, through the 1st of April coming through here. So 2 days essentially, going sideways before it finally broke out of that structure. Okay, so because we have structure to the left, guess what? Price is very likely to get stuck there and to get stopped out there. So think of structure as basically support and resistance as well, because this is where price is typically going to have an issue with. And the stronger or the longer that price was in structure, the more of a problem it's going to have trying to get past that structure. Okay. So as you can see, once price came up to this structure here, it literally went sideways all the way, again, until it broke. So until it broke. All right. And you can even see, if we keep moving over, that it didn't break all the way down to support like you'd think it would. Why is that? Well, again, if we look to the left, there's a little bit of structure right here where price moves sideways. And guess what? It did the same thing here. These 3 candles, these 4 candles here, did the same thing with these 3 candles here. So structure, break, structure, break, structure, and then break again. Okay? So these are, and while this is happening in structure, you can see that it's literally moving straight sideways. There is no creating, up and down like it is here. It is really just moving sideways. So even though you see these engulfing candles back and forth, it is literally just buyers and sellers fighting over control of price. That's all it is. It's just buyers and sellers fighting over control of price. So what do you do in this area here? Well, for one, you don't trade it. That's for one. You don't trade it unless you're a scalper or something like that, and you would basically lower down to a completely low time frame, like a 15-minute time chart, because this is going to look completely different on a 15-minute chart. But if you're a trader that does, the higher time frames, hour, 4-hour chart, then this is what you're going to have to deal with. Okay, and what you would want to do is just basically draw some support and resistance lines in this area here, like this. So just draw some support and resistance lines in this area, okay? And then all you're waiting for is, if you're going to trade it, you're waiting for a break of this zone, of this area, is what you're doing. You're just waiting for a break of that zone, okay? Now, very important that once price breaks this zone with this candle, you still don't want to trade it. The reason why you don't want to trade it, even though it's broken free from this structure, is the fact that a lot of times, and this is highly, highly likely, about 90–95% of the time, you end up getting a retest of that same structure. Okay, so price may break it, but then tries to go back to that structure. Okay, because it feels comfortable in this structure. Price is very comfortable here. These big moves here, price is very uncomfortable doing that. That's why 90% of the market is always moving sideways and consolidating. It's not always trending up or trending down. It's 90, 85% of the time, the market is moving sideways, consolidating just like this. This is the market's comfort zone, okay? So what do we do whenever we have something like this? Well, we typically have the break, of course, and then right after the break, we typically have a candle that tries to retest that zone again, okay? And then if that zone gets retested, it's either going to do one of two things. It's either going to go back into that zone, into that comfort zone, or it's going to come right back down and actually make the real drop, okay? And that's when you would want to get into the trade. So this will help you avoid this right here. And you're looking at, 12 hours here of nothing, moving literally sideways for 12 hours when you could be trading something else that's actually tradable. Okay, so you do the same thing. You go ahead and you take a line and you literally draw a box. You can literally just draw a box on it. And you do the same concept. You just wait for that box to be broken, whether it be to the upside or to the downside. Since it did break to the downside, we're expecting a break to the downside, right? That's what we're expecting. So that's what we want to look for. And this would be the candle that you want to get into that break on. Okay. So let's take a look at a couple different things, a couple different other examples. Let's just follow this up here. So let's just take a look here. So here we have, as we can see, buyers in full control of price. As buyers get close to a resistance zone, what do we see? We see price starts to slow down. We see it here already with this candle here. We have buyers trying to push up past it. Sellers come into the market and say, no, you're not going past there. Again, buyers try to pass it again. Next candle after that, sellers like, nope, we're going to be fighting over it. After that fight is over with, here is the next candle, and here's the bearish engulfing candle here. Okay, this candle here tells you that that sellers are in control of price. Okay, and if you're trading something like this, and you're wanting to get into a trade like this, where would you get into the trade at? So what you want to do is, if you're thinking about trading this, number one, for sellers to be in control of price, it has to create a new low on that candle, right? So it has to pass this candle here, and it's got to pass the next candle there. It's got to create a new low underneath either one of those candles. Okay, so what we would do is you can potentially have a pending order, okay? Pending order right below the wick. So like a pending sell stop order on the bottom of that wick. Now, why is that important? Is because if we look to the left, the previous bearish candle is a big engulfing candle. So we want to make sure that this next candle covers over 50 to 60% of that bearish candle. Okay, and then we would put our stop loss up here. Now, we wouldn't put it exactly right, literally touching that top wick. We want to put it somewhere where price can't reach it, because price has already gone to the top of that wick, right? So you want something, an extra barrier of protection to where it won't reach it that fast. So I typically do maybe 3 to 5 pips above that wick. Okay. And then my sell stop would be here. Now, as far as my take profit goes, if I look to the left, I'm looking for where can this how far down can this go? Can this make it all the way down to my next support area? Or am I going to have problems somewhere? Okay, so if we look to the left, what do we see? We see this entire area of structure. And we also see that price never made it to actual support. So what is the likelihood of this going all the way down to support? Not very likely, because if we look to the left previously, it did not do that. Okay, so if you're trying to take a trade like this, you have to keep all these factors in mind. Okay, look to the left. Looking to the left is going to save you from getting into a lot of bad trades. So always look to the left and find structure, which is right here. So if we're trying to find structure, right, and we find it here, we want a place, we want to set a take profit that's easy for price to hit, right? So what's going to be easy for price to hit? Would it be here? Would it be down here? Would it be here? Or would it be here? Right? So if you look, price starts to have problems right on this line. Okay, so we know for sure that price made it at least to this area here, to this line. And I'm not trying to be greedy in the market. I'm just trying to make sure that I make a good trade so I can make some kind of profit from that trade. Okay, I'm not looking to make 1,000 pips on a trade. Okay, I just want to make at least a good trade where I can win the trade and have the odds in my favor of actually hitting my take profit. Okay, now a lot of people would actually place their take profit here, because that's just a level where you psychologically see that price, got stuck at, essentially, over and over and over again. But you want to make sure that you play it smart and you take as very little risk as possible with your capital. Now, here's one thing that you can do that can just potentially help you avoid this trade to begin with. Okay, so what you want to do is you want to pull out your risk to reward ratio, and this is something that's available on TradingView.com. If you don't use the platform, create a free account and you can use it. It's an awesome platform to do charting with. But anyway, so you can go ahead and pull out the risk to reward ratio and just drop it on the chart. Okay, and one of my rules that I trade by is I want to have at least a 2-to-1 risk reward ratio. If I cannot get a 2-to-1 risk reward ratio, I am possibly highly likely not to take that trade. Okay, because I don't want to risk, I don't want to get into a trade that's a 1-to-1. I like 2-to-1. I like to risk 1 and then get 2 out of it. Okay, so if we take a look, all right, at what our risk reward ratio would be if we were to get into this trade, right at the bottom of that candle where we have confirmation that sellers are in control, we put our stop loss here. Okay, our risk is not very much, is less than 1% of your account, which is great. Okay, now when we start to look at take profit zones, though, you can see that just to get a 1-to-1 risk to reward ratio, you're having to get to this particular level, which is not bad, because you can see that price just is where this started. So this is a 1-to-1 risk to reward ratio on a trade. Okay, me personally, I wouldn't take this trade because it doesn't meet my trading plan of a 2-to-1 risk reward ratio on a trade. Okay, some traders, as long as they get at least a 1-to-1, they trade it. Others, they look for different risk to reward, but I do at least a 2-to-1 risk reward ratio. that keeps me out of potentially bad trades. Okay, my capital is the most important thing that I have, and I want it to last as long as possible. That way I can keep trading and keep doubling my account and using the compound effect. So this is a trade that I wouldn't get into because of that particular aspect of it, but by all means, you see that you could have gotten a 1-to-1 risk reward ratio, and you could have easily gotten that traded. Okay, cool. All right, so I hope that helps you guys see a little bit more about price action. If you enjoyed this video, please share with others that it could potentially help. And if you have any questions, you can definitely reach out to me, and I'll be more than happy to help you. And you can go to our website, fxntrading.com, as well. Thank you guys so much, and enjoy your week of trading. Have a good one.